Okay. Good afternoon, Checkmate traders. Today is Wednesday, July 13th, 2022. It's just afternoon here in New York, midday. So let's talk about what's on everyone's mind, and that's the CPI report. It was in the nines. So yesterday on our Say What segment, that Say What is just our overtime segment. Where sometimes some people will stick around after high noon highlights, and we'll go a little bit deeper into whatever we talked about, and we'll also talk about things that are outside of the day-to-day data and the outside of the day-to-day, like your trade setups that we talk about on high noon highlights. So yesterday, one of the OGs, DJT, he was saying that there was about he felt like a 10% chance that we printed something over 9, and that's what we got. We even talked a little bit about, what the market's reaction might be if something like that happens. So this really highlights the difference between, being right versus what the market's expectation and what the market's reaction is. So yeah, you may be right on the print, or we may have been right on the, that we see this outsized move in CPI, but the market's reaction is actually kind of muted. Okay, for the VIX that we have, we were pricing in about a 1.5% move on a daily basis, just based on the VIX. Based on options positioning and options expiration today, we were supposed to see, 1.5-2% moves on this, and right now we're not even a third of that. So, very, very muted response. One of the biggest muted response actually is in treasury, is in longer term treasuries. This is the most sensitive part to inflation. Okay, ZB is your long term treasuries futures contract. Okay, so this is how you can track the price of a 30-year bond. Okay, price, not yield. I said price. Okay, the price of the bond. So when the price of the bond goes up, yields come down. When yields go up, prices of bonds come down. Okay, so with inflation being this high, and initially, I guess there was a dip. Yeah, there was a dip initially, but it's recovered all of it and more, and now it's just leveling off. So basically, it's like the bond market just doesn't care. Okay, it is what it is. I mean, it's not about what we think. It's not about our opinions, because our opinions are, as Jesse Livermore said, most opinions are wrong, but the market is never wrong. It's not really, our opinions are not important. What's important is how the market reacts, and it's not really reacting that much. Now, one of our members did mention that there is reminded me that there is a 30-year treasury auction later today. It's actually in about an hour. And actually, I think that might be the tell. Okay, let's see what happens during that auction. If the yields come in much higher than expected, and Treasury's ZB drops after that, that could be the lie detector. Or if Treasury bonds actually have a lower yield than expected at the auction, and Treasury bonds keep rallying after that auction, then that means that the bond market pretty much already expected this. Okay, basically this has already been priced in. One of the things that I think is also very telling right now is TIP-TLT. We've been tracking this for a while right now. In the morning, it gapped up. It gapped up strong. So I thought, oh, wow, maybe we see a breakout. But now it's tapering off again. So again, I think it's just a very muted response from the bond market. I'm kind of perplexed myself, really, to see this, and we see such a muted response. I thought, if we saw nines, and after I had that conversation with DJT, I thought, if we see that, we might see like an outsized move in bonds. And also, too, especially since the MOVE index, which is, the volatility of the bond market, it's been steadily going up. So I thought we were going to see some big moves. That is not what we're getting. So again, it's not about what we think. It's about what the market is thinking and how the market reacts. And the market really isn't reacting that much to this. So I guess all eyes on the Fed. Okay, I guess it's all eyes on the Fed. ECB meeting and the Fed for the last week of July. So it looks like that is what everybody, it appears as of now, that's what everybody is looking out for. And again, we have that auction coming up. We'll see what happens. Here was, last one I remember in June, a lot lower than expected, the yield. And that was also on the same day as that ECB meeting. If you remember that bombshell ECB meeting, and in the afternoon, it's the market sold off. Well, it actually also coincided with the Treasury bond auction, and the actual yield on that auction was a lot higher than what was expected. Okay, and it sent the markets downward even more at the end of the day. So, will we get something like that today? I don't know. If this comes in like over 3.185, like if it comes at like 3.2 or something, 3.3, and it just keeps going up, then yeah, I can definitely see that. I can see all the gains in growth, all that overperformance and growth over value. I can see this coming back down. You know, if that happens, if treasuries start coming down, or if yields start going up, treasury prices coming down. Okay, so definitely I can see this, boom, getting shot back down. All that overperformance. We will see. Okay, so all eyes on the bond auction and all eyes on the Fed. Okay. Speaking of bonds, I think another telling thing, just because we're on the topic of treasuries, one of the things that I think you all should look at, just because I see it a lot on Twitter, and I know a lot of you guys are on Twitter, you get, some of you guys are very active in there. But anyway, one of the things that I'm noticing is a lot of chatter around the carry trade in treasuries, and people are quoting like the long-term bond. Actually, if you want to take a look at that, you want to look at the 5-year treasury note. I think, and that's ZF. The 5-year treasury note futures contract is ZF. But anyway, if we see this go up, the actual price, that means that shorter-term yields are coming down. That actually, I think, is a good sign that we might see the dollar ease a bit. Okay, if we see that the shorter term yield comes down, which means shorter term bonds prices go up, that could put some pressure on the dollar and finally bring it down a little bit. Okay. Also, it will steepen the yield curve, so that should be a risk on signal. And also, too, bank stocks will like that as well. So I think that is something that you'd want to take a look at as a leading indicator. Okay, it really is all about the dollar. But I think in order for the dollar to come down a little bit, we need to see shorter-term treasury yields come down, meaning shorter-term treasury prices go up. Okay. And that might put a little bit of pressure on the dollar. Actually, how is the dollar doing right now? Oh, it's down. So we'll see what happens. I know it was up earlier. Yeah, it was just not too long ago it was up. And then it just dropped. Okay. I mean, I don't think this is any meaningful drop yet. I mean, get to around here, and then we can talk. All right? Get to here first. Right, but even then, I mean, it could still just keep going up, right? I mean, we saw that in May and June, right? I thought this coming down, I thought we were going to come down to here. Nope. The market had other intentions. Same thing. I mean, we could get down here, but we could just curl up again. And I think the longer this stays up, the more issues we're going to have overseas in emerging markets. Emerging markets are recovering some of its gains. In Sri Lanka right now, I know we've been using Sri Lanka as as a case study for emerging markets, especially in this round of what we think is going to be a potential EM crisis. It's already starting, in places like Sri Lanka and stuff. And the president of Sri Lanka just left the country. He had to basically run away because there were rioting, the rioters broke into the, I guess, presidential palace and all these other government buildings. And so, we're already seeing this in some countries, and usually, it starts with one or two countries and then it starts spreading. All right. We will have to be patient. The markets are forward looking. So I think this EM crisis will probably happen next year. So probably in the next 6 months, I'm guessing that, prices, EM stocks will come down. Actually, I bet money on it. That's why I still have my puts. But, today, we're seeing that recover from its gap down. Let's take a look at CEW. I know we have a chart here that compares the two. So yeah, even though EM is up, CEW is down. Okay, CEW is still down, going down. So I'm still confident in my trade. I'm still going to hold it. I don't know if it's going to go back to COVID lows. I think that would be a little ridiculous. But definitely, I could see it coming down, about 10% from here. If it came down to COVID lows, that would be such a gift. But that's not how this is used. That's not how the CEW indicator, the currency indicator, is used. It just spots trend continuations or trend reversals. Okay, and definitely it's giving us the signal that the trend will continue. So I'm hoping it continues, and I'm hoping that the trend accelerates. Actually, now that the dollar is in this in this higher state, and we'll see if the dollar rally continues. I think it will. Also, some of you guys have talked about, that you've seen some chatter about peak inflation. So yeah, so the CPI data it looks 3 months back. I said this in the video yesterday. It doesn't tell you what's going on right now, and it doesn't tell you what's going to happen in the future. It tells you what happened 3 months ago. Okay, so 3 months ago, where were we? We were here. Okay, so oil prices were still relatively high. They've come down a bit. They've even come down in April as well. We had another peak here. So, possibly, maybe not this one, but maybe within the next two readings, I definitely can see that being the peak for the season. Okay, the seasonal peak. All right. Not to repeat myself over and over again, but you guys know what my thoughts are on where we are in the economy. I draw a lot of parallels to the 70s. And in the 70s, we had this thing where, inflation would be there, Fed would tighten, and then we'd get into this recession obsession, and then the Fed would ease or take their foot off the gas pedal when it comes to tightening. Inflation would rear its ugly head again, and they would have to tighten all over again. So this cycle, this kind of back and forth between inflation and recession obsession, I think is going to happen here. Now, I don't think it's going to last as long. Markets are a lot faster than what they've been. It's a lot. Money moves now across borders much faster than what it did in the 70s. So I don't think it's going to take like 10 years to manifest itself like it did back in then. But I do think that for the next 5 or 6 years, we could be, between those two narratives, inflation versus recession. Okay. So maybe I think, the next two prints, maybe this print, next one, or the one after, that might be the peak for the season, for the next, let's say, 6 to 9 months or a year. Then we could see inflation really cool off because, we've seen energy prices cool off. We've also seen, food prices cool off as well too, and that should be a big factor. Okay, but again, we'll see. We'll see. Rents have come down as well. So I suspect, again, maybe this one, next one, or the one after. But definitely before September, I think, or September or before, I think those are going to be the peak readings. And after that, we'll probably see the CPI number cool off, I think, for the next, 6 months to a year. And then I think it will come back. And that's the next season of the commodity wave. That is when we're going to really take a look at going long on gold. All right. Oh, gold is not doing so bad today. Gold and uranium. Okay. That's what I'm going to go long on the next cycle. I think that's going to happen probably mid next year, maybe. We can expect that. So mid next year. Yeah, so that these are the things that I'm looking at right now, to get long next year. So I'm just looking ahead. I'm not trying to predict the future. I'm just anticipating 5 or 6 moves ahead. Okay, so I'm already thinking about what's coming up. All right. Now, with all this tightening and all these interest rate rises, if you guys, I don't know if you guys had a chance to go over the Say What segment yesterday, but at the end of it, we came to a conclusion that perhaps there is a play coming up in the retail space, XRT, which is a retail. We were looking at XRT. We were also looking at XLY, which is consumer discretionary. We looked through some of the components. XLY has a huge Tesla and Amazon exposure. I think it's like 40% of the ETF is Amazon and Tesla. So, I mean, it's very possible that, retail suffers, but then the rest of tech gets, bid up. It's definitely a possibility. So, if we want to take a bet that the retail consumer is going to get hit by all of this, I think you want to stick with XRT over XLY, over the consumer discretionary. Okay, that's just me. And it's a little bit more diversified. I think the biggest holding is like 1.6%. So it's a little bit more diversified. There's not like one or two stocks that are taking over the whole sector, like XLY. So that's why I am going to opt in for XRT. But anyway, this is basically a bet against the U.S. consumer, that the U.S. consumer is going to get weaker. And I think this is going to be the play for next year, okay? In the beginning, in the video yesterday, we said maybe in the beginning of the year. I don't know about the beginning of the year now that I think about it. I mean, I think it may be more like mid to end of next year that we do this play. But anyway, I'll keep monitoring this, and I'll let you guys know as we get closer and closer to this. But basically, we're going to want to track household debt levels, household credit card levels, and this is something that we can get. I believe on the Fred website, they have household debt numbers and credit card numbers. It's a little bit lagging. I think it's like a couple days lagging, but it's still good enough. So I'll be monitoring that. I'll have a list of all the consumer strength charts you want to be looking at on the Fred website, and I'll try to have that available by next week. I'll have those links available. I'll put it in the information section in our Discord. Okay, but once we see, I think there's going to be a relief rally at the end of the year. We probably will see a mini bull market next year. After that, though, definitely I'm going to be looking at building put spreads on XRT. Okay, it's a little bit too early to start building the trade right now because, obviously if we do a short on this, we're going to want this to be back to like near all-time highs. So if this comes back to like the hundreds or so, I'm going to start building those puts out. And hopefully it gets to that point towards like the mid 2023. That would be awesome. Mid 2023, this goes up to here, and we buy like 6 to 9 month put spreads. I think that would be great. That would be a wonderful play. But again, this is like we're very early for this. Okay, I'm just thinking like 6 months to a year ahead already. Okay, those usually are the best trades. The trades that you can see coming from months away, that you have to be super patient on, and then people forget about. I often find those to be the most rewarding. Those are the trades you can really lean on and multiply your account with. Okay. So, if you're a small trader, you definitely want to be looking for these big trends that are supported by data. Okay, I think so. I think the debt, household debts, will be, people are using more and more of their credit cards. Their interest rates are going to be higher. It's going to hit spending. Okay, at some point. We're going to see, and also too with inflation coming back next year, if it comes back, that definitely there will be demand destruction on top of that. And not only that, I also suspect that we're going to have tax increases in 2024 because budget deficits are inflationary, and so I think next time when inflation comes back, not only will have to be a monetary response, I think there's going to have to be a fiscal response as well too. Okay. Also, a lot of government spending is tied to the CPI. So a lot of entitlements, Social Security, the cost of living adjustments, military pay, all of these things are tied to CPI. So if those budgets need to increase, what's going to happen? Okay. And at the same time, you can't have a budget deficit and your budget is increasing. What's going to have to give, right? They're going to have to increase taxes. Okay, I think it's inevitable. And around 2024, they're going to have to increase taxes. Okay, so tax increase plus inflation plus higher debt servicing costs for the retail consumer, recipe for a breakdown. But again, I think it's going to bounce up with the mini bull market and then break down. So we wait and we're patient. We're going to be patient. And we are going to hit the soft underbelly of the market when it's the right time, okay? After it comes up, hopefully that will be like mid next year. And then we see, okay? So again, just anticipating ahead, all right? I'm not trying to predict the future, just anticipating what could be and a potential trade. And I think that would be a very juicy trade if we get that, all right? Just thinking ahead, that's all right? One of our members said that they were going long on oil. Oh, oof. With some oil contracts, some calls, I believe. That is, it was positive. So even me, I might even nibble at 94. It was at 94, and I think the risk to reward is not bad actually for going long at 94. If you go long at 94 and it closes under, that's your signal to get out of that long trade. So that the drawdown is actually quite low if you're wrong. So if it visits 94 again today, I might take a long at 94 with some call spreads, okay, vertical call spreads. So I might do that myself. All right. So at 94, I go long today. Or if you want to be super patient and you really want to stack the reward to risk in your favor, you wait for the 120s to short. So I hope she's right. I hope that member is right. I hope Ari's right. And then this pops up because I think that would be a great trade right here. Just short it right there. Okay. And again, I've listed out many weeks ago why I think this is going to be the high for the season. We're getting now towards the end of the driving season. Within a couple of months or a few weeks, we're going to have refinery shutdowns as they switch over to the winter blend. So there will be less of a bid for oil. And again, the peak usage of gasoline will also have passed. So I think that is a great short. So if it pops there, again, the plan is to short. That plan hasn't changed. My short trade on oil still has not changed. I will leg into put spreads here, leg in very small here. Most of the oil shorts will come here at 120. But now I'm just revising it and putting a long trade as well too. I'll go long at 94. Or maybe at the low of the day. If it goes to the low of the day, what is that? What's the low of the day here? 93.67. Okay, so if it goes to 93.67, I see it bottoming, then yeah, I'll go long. Okay, but I have to see it bottoming. If it goes to the lows and it just keeps going, then I will not go long. Okay, it has to touch the lows and give me like a bottoming formation, and then I'll go long. Okay, so we shall see. Let's look at other energy. What's going on with natural gas? Natural gas up. Oof, look at that. So the export terminal, they say, is almost ready to be reopened again, or if not already reopened. I'm not sure. I don't know if any of you are tracking that. But I know like a week ago or something, they said they were close to reopening that export terminal that caught on fire in Texas. So maybe exports will continue. We shall see. Okay. RBOB, gasoline. Yep. On its way down. As long as it's coming down, I don't see a bid happening in oil. I think if you really want to be quote unquote more sure that this may turn up, you really want to see RBOB go with it, or the gasoline. Okay. This increases, crack spread increases. This goes down, crack spread narrows. All right, crack spread is what refineries, that's their profitability right there. All right. Again, I guess time will tell. Okay, so that's that. One more time, corn. Still same plan if it gets there. If that's a big if. I don't even know if it's gonna get there. Actually, you know what? That should have been. We should have considered taking a short there. Too bad we didn't. It is what it is. You can't participate in them all. All right. To participate in every move, that's like the quickest recipe of like losing all your money. All right. You have to be very selective. And being selective on your entries forces you to be selective on which trades you take. And sometimes it's not the trades you make that defines your success. Sometimes it's the trades you avoid. Sometimes it's the losses that you avoid that really defines your success, okay, in trading. So always keep that in mind. ZW and also ZS. Yeah. Feeder cattle. Whoa. What is going on here? Feeder cattle. Oh, man. Meat prices. What is going on? That's interesting. Hog prices. Okay, so that is very interesting. I don't know what's going on in feeder cattle. I'll look this up and see what's going on here. Huh. I didn't notice that till now. All right. But for the most part, most of the foods are coming down. We're seeing just a little bit of, I think, a relief rally in the grains today. We'll see if this continues. If it gets up to there, again, I short. Okay, that's the plan. Let's look at Australian dollar. All this currency movements. The dollar is still down. Australian dollar. This is the lie detector. Again, I've been saying this, lie detector for China. All right. Remember here when they were talking about Shanghai reopening? The media was saying, oh, they're going to reopen. They're going to reopen. Even the Chinese state media said that, oh, we're going to reopen. But next day, Australian dollar called BS. And that's when I started legging into FXI puts. So far that has paid out. Today, we're seeing just a little bit of a bounce. And Australian dollar, but it's still within that channel. It's still within this downward channel, okay? So, and it just backed off from it. So I think we're still in this kind of downward trend in the medium term, okay? And that is helping this stay down. Especially if the dollar keeps going up like this, I definitely see this coming down soon. Because China also has, and with interest rates going up, China has a very large real estate sector. Like 25% of their GDP is real estate, and their real estate industry is just riddled with debt. Okay, so we'll see. We'll see what happens. Okay, but we've already placed our bets, and I'm happy with it. So we'll see if it starts popping up and the dollar starts coming down, then then we can manage our positions and get out. But I don't see a reason to do that yet. Okay, EEM still within its channel. It's still coming down. Way more pain ahead. All right, this is going to be a longer term play too. Like, I know this is March, but if we have an initial sell off in this, and let's say I take profits before the end of the year, I think there's going to be another re-entry to short EEM after that, maybe like 6 months after that or something like that. Okay. Again, not trying to predict the future, just anticipating 5 or 6 moves ahead. That's all. All right. So that's our positions right now. What else are we looking at? Oh, let's look at Bitcoin. Okay, let me pull that up real quick. Oh, before we go to Bitcoin, hold on, I almost forgot. Let's just look at our spreads real quick. All right, 10 and 2 getting further inverted. Not good for bank stocks. Okay, earnings are about to come out, and again, I've told you guys this. I think that a lot of companies are going to revise their earnings estimates lower. I think by about 5%. And, maybe not in the oil or oil industry or, maybe materials. They might guide a little bit higher, actually. But I think banks definitely are going to guide lower, okay? And maybe so is tech, all right? And they have every incentive to do so. I went over this yesterday in the high noon highlights. They have CEOs have an options award in September. So they have an incentive to guide earnings lower so that the stock sells off, so that when they get awarded their options contracts, they get awarded for lower strikes. And lo and behold, they also, those lower earnings estimates also create a very low hurdle to beat for the next earnings season. So then, again, lo and behold, when next quarter they beat earnings, all of a sudden their stock pops, boom, their options are in the money. So, that it's one of the oldest tricks in the book that CEOs do. They've written about this, like even 100 years ago in the 1920s, they wrote about this. Okay, so this is a very old trick that they use. Bank CEOs have an excuse to guide lower because of this. They can say, oh, the yield curve inversion, the state of the economy, the state of the dollar, all these are very quote-unquote valid points. So I see that happening. So it's getting more and more inverted, and bank stocks are taking a little bit of a hit for it. Let's look at the 30 and the 10. 30 and the 10 is coming up. So interesting. Okay. So 10 and 2 going down. This still up. Usually the 10 and 2 can sometimes give a lot of false signals. Usually when pros look for an inversion, a signal, they're usually looking at the 30 and 10. Okay. And we just saw it briefly like a month ago, and we're just kind of hovering here now. Okay. So we shall see. TIP-TLT gapped up, coming back down. Still in no man's land. We're still stuck in this no man's land. We thought we were going to break out of no man's land, but we popped back in. So we shall see. All right. I think the market is also perplexed as well. It can't really find a direction, even in bonds. And that's why the MOVE index is so high. And it still keeps going up. I think this probably goes up at the end of the day today. Okay? We shall see. They only report this at the end of day. All right? And again, if we see that yields are going up because of inflation fears, especially in the 30-year auction that's about to take place in about 25 minutes. We can definitely see this coming down, the growth versus value. So if you guys are betting long on a bull market rally, or a bear market rally, you guys want to probably keep an eye on this chart, okay, to see which areas are you going to go long in, okay? Because there are going to be strong. It's not going to be all of them going up all together, in a strong fashion. I think some areas of the market will be much stronger than others. If this is trending up, growth will be stronger. If this is going down, the Dow stocks will be stronger. Okay, so just keep an eye on this, guys, if you guys are trying to play the counter trend rallies. All right. What else? Bitcoin, gold. Let's talk about Bitcoin now. Okay. So Bitcoin gold ratios is coming down, getting closer to our level here. This is the level we really want to go long. Okay, this is what I'm waiting for. Okay, it requires a tremendous amount of patience. Believe me, guys. Believe me. I've wanted to get in some of these trades with you guys, but I'm just keeping real patient right now. Keeping really patient, and I'll start legging in here. Okay, this is the Bitcoin to gold ratio. All right. Let's take a look at some of our Bitcoin metrics. Give me 1 second. I thought I already had all this pulled up, but I guess not. Okay. So, as we can see here, retail, puts, bought, puts. Okay, puts. So, yeah, because of the CPI for the last day, overnight, cryptos are 24-hour market. Deribit, they trade those options on a 24-hour basis. So, yes, definitely lots of protection. Looks like end-of-month protection. So all eyes on the Fed, huh? Again, all eyes on the Fed, even in the crypto market. It's really funny, sometimes, I remember even 6 months, a year ago on Twitter, you would hear all this all these crypto people saying that, trade fi, we're never going to be like them and they're the enemies and all this talk. But slowly, Bitcoin is looking more and more like traditional finance, more and more, okay? I still believe you can't have one without the other. You need both. In the crypto market, you need traditional finance, to participate in this, to really have longevity. Anyway, I digress. That's not important. Okay, so what's important is what the market is telling us right here. Okay, it looks like we're seeing calls and puts, but lots of open interest on calls, but lots of volume in the puts. Okay, so we're seeing and volatility is going up. Look at that, volatility is going up. Since when? Okay, since 8 in the morning. Since 8 in the morning. So since right before the CPI report. So right before the CPI report, historical volatility goes up. Boom. What about that? So that's it. So it looks like hedging, hedging on the downside, or maybe even speculation on the downside. Okay. Let's take a look and see what's going on. And as always, I have to redo this every time I open this. Okay. So let's really look at. So this is where we had a lot of volume in the last couple of days. So it still kind of mirrors what we saw in the last 2 days. 19,000 strikes. That was our point where we could have either saw a panic. Remember, I said that we were either going to see a reversal or a panic. That's one of our pivot points, and it looks like it respected that pivot point. Yeah, so it dipped under, and then we probably saw some calls being sold, some puts being sold there. Okay, Probably people cashed out of their puts. And that's why here we're seeing all that put buying and selling volume. Probably bought before and then right after report sold it. Because it was, within expectations. I don't think, a beat by 0.3 percentage points, I don't think that's that huge. People were expecting this. They got that warning from the White House press secretary. Definitely that's reasonable to think that after the CPI report, people just cashed out of their puts. Very reasonable. And we're seeing a lot of volume there. And there was a lot of volume in there and a lot of open interest beforehand. So it makes a lot of sense. A lot of people got in, and then they saw the CPI report. A lot of people got out, and then it bounces. Okay? So again, put buying, if market participants are buying puts, that means the market maker is selling puts. Okay? Buying a put is a bearish position. Selling a put is a bullish position. The market maker has to sell all these puts. It's a bullish position, so they have to short Bitcoin to even out their books. That's why as there's put buying, market goes down. Okay? As there's put selling in the market, as the market cashes out these puts, the market maker has to buy these puts. Buying a put is bearish, so they have to get bullish on Bitcoin to even out their books. Okay? Dynamic options hedging. Something we see in SPY and in the indexes and S&P 500. I think we're seeing that in Bitcoin. All right? Let's look at the end of the month and see what's going on here. Oh, wow. End of month hedging. Okay. Looks like end of month hedging for 18,000. So what it could have been too was, and I have to look at the options order flow, but what could have been is it could have been like an options roll where people are cashing out of their closer dated, more in the money puts and buying something further dated a little bit further out the money. Okay, because right now, these premiums, 0.03, 18,000, 0.03, and what's the delta on these? At 30 delta. And then if we go look at the 15th at the 19,000. Yeah, so I mean, definitely it's possible. Maybe they rolled it. Maybe they rolled it further out. Okay, they cashed out of these, and then they bought this to hedge a little bit further out. Definitely possible. 18,000. Oh, I'm sorry. The delta's 30. So yeah, I mean that makes about it's about the same actually, right? Is it the same? Yeah, delta 30 for delta 30. Okay. Huh, funny how that works. It's delta 30 and they just rolled it into delta 30 but with 2 more weeks of time. How convenient. How convenient. Yeah, so they're rolling out that risk. So there is still risk, but they're just pushing it out 2 more weeks. Okay, there's still this perceived unforeseen risk out there that the market is quote unquote observing, and they just rolled it out 2 weeks, it looks like. So okay, so still generally risk off sentiment in Bitcoin. Okay, I think so. I think it's a roll. I'll confirm that later on, but I think it's a roll. I think all these puts got rolled. All right, from 19,000, they cashed out of this and they put it into this. Okay, delta 30 for delta 30. All right, delta 30 here into delta 30 2 weeks out. Okay. Again, the important thing, if you don't understand deltas, if you don't understand the option Greeks, what it really means is that, again, there was this perceived unforeseen risk, that people had for this week. They're just moving it now to the 29th, and which is entirely reasonable because this was the CPI report and now this is the Fed meeting. So now that this is over, the next risk event is 2 weeks out, which is the Fed meeting and the ECB meeting. Okay, so there's a lot of demand now. The pivot, I think, has switched to 18,000. We'll see if the July 22nds come into play. It's a little bit, normally these would be like high volumes, but we're seeing way more volume on the 29th. Again, I think it's because of that Fed meeting, the end of month Fed meeting. all eyes on the Fed. All eyes on the dollar, all eyes on the Fed. Okay? So that is, that's now the pivot. Okay? This is where it could either reverse or it could have another mini panic if it approaches there. Okay? But that mini panic is going to happen closer and closer to expiration because that's the gamma effect. And the gamma effect is stronger when we get to expiration. We're still 2 weeks out. So I don't think we're going to see that type of gamma panic per se. I think if we hit 18,000 for the next 2 weeks, it may bounce from there. Just like we saw here. Just like we saw here for the last couple of weeks. Okay, every time it hit like 20 or 19,000 based on where the high volume strikes were, it just kept bouncing from those levels. It would hit and bounce, hit, puts get sold every single time. I think it just shifted down a little bit to 18,000. So maybe we drift a little lower and hit there and come back up, hit there, come back up for the next 2 weeks. I can see that happening. That's what the options market is saying, at least. That is definitely a high possibility because that's how it looked like here too. So if you guys are day trading Bitcoin, maybe use that as one of your levels. If you're day trading that, it doesn't mean it can't get below 18,000. It still can. It's just, you're just going to want to see those signs. Look at the historical volatility and look at those order flows. Again, if it hits that 18,000, you see a flurry of put buying and you see devol and volatility going up. That means we're having a little mini panic. Which we did. Actually, we had a mini panic a couple of times. Here, this was one where it broke that 20,000. And, we broke that 20,000 and then, it was like a mini little gamma panic, but then it recovered as people bought calls and sold puts again. All right. So, again, if you guys are day trading, just keep an eye on that order flow. But if you guys are short, if you guys are going shorter term, that may not be a bad place to take your profits right here as we approach that. Okay. If you're short here, it may not be a bad place to take your profits here. Again, and not a bad place to go long here with a tight stop. Okay, for the next 2 weeks. If you are inclined to day trade, that is. I'm not inclined to day trade. I don't like to sit in front of my screen and push buttons all day. That's just not my style. I like to make the big moves, the big money, and sit back and be comfortable watching big money come in. That's how I like to trade. But that's just me. Everybody's different. Okay? All right. Last but not least, let's just go over our positions just as we always do. Okay. UVXY. Still in it. Still in my call spreads. The 14.24 call spread for December, long the 14, short the 24. I'm also long the 15.20 call spread, long the 15, short the 20. Okay, these are still in the profit, by the way. Remarkable. Again, putting that skew in your favor. Okay, using math. FXI still in it. We're still in these. Very small amount of this. Most of my legging in has been in the November put spreads. That is the 31 and 26, long the 31, short the 26. We are in good profits here. I think we're about 30% ahead on this spread. Overall, I think I'm up about 10, 15%, even with the losses here. If I had done spreads here and, exercised good risk management like I usually do, but I just didn't on this one mental lapse right here, I think I'd be up overall 30 or 40% on this trade. But I think I'm up now like 15 or 20 overall. So, it's still good. It could have been better. But who knows? Maybe this continues and we get a huge payout out of this. Very possible. I'll keep holding. EEM, still in the same position. Where are they? Yes, our March puts for 39. We're in the money. Hooray. I still think there's more to go. Way more meat on those bones. Okay? So we're waiting on that. What else? What else do I have a position in? Give me 1 second. Let me just check my notes here. UVXY, EEM. Yeah, FXI. And then again, oil. I think it's pretty compelling long if we get to 94. And of course it won't. Of course it won't go back to 94. Of course. because I said I wanted it at 94, and of course it has to go back up now. Of course, okay? So yeah, I guess we'll wait for the short. If the dollar goes down, definitely I can see oil going up to this area. It's possible. I'm not trying to predict the future. It may not get there. And if it doesn't, oh well. But if it does, I'm shorting here. That's the plan, okay? Plan still hasn't changed for SPY yet. And again, I told you guys this yesterday, these lines may change. If those earnings estimates, if they start guiding lower, I'm going to start pushing some of these lines a little bit lower. Okay, if it's more than 5% lower, I'm going to push these lines lower. All right. If they guide 5% or less lower, then I'll keep it the same. Okay, but that's just what I see. All right. The JPM reports earnings tomorrow morning. So bank stocks, and then tech is like 2 weeks later. Okay, so we'll know more in about 3 or 4 weeks. All right. And again, long-term plan. Again, it's not even worth mentioning right now because it's about 6 months to a year away, in my opinion. But I'm looking to short XRT at some point. Again, I want to confirm that data, that consumer data. I'm going to post some links of the Fred website of consumer debt, consumer spending. Some data points that we can use for this. But again, this is 6 months to a year away, so not even worth mentioning. Another thing. Uranium too. I still like uranium. Again, this is about 6 months to a year away, but we'll see. Yeah, we'll see. All right, that's all I had planned. Did you guys have any questions? Any questions? Anything you guys want to go over? Anything you guys want to go over? Going once?
Hey, Mick, those, I know you've kind of mentioned them as a, regretful mistake, but the August 19th FXI puts, are you just looking to cut those at break even or even at a loss at the moment?
No, at the moment I'm just holding. I'm just gonna hold it. That's very small.
Man, I set a damn limit sale. I was 20% this morning. Of course, being greedy, I fucking set it like 1 penny more than what it was, and now I'm back down 11%. But
I mean, that's just one day's move, man. I think we've got like another 3 or 4 weeks left for that. I mean,
trend's definitely down.
Yeah, trend's definitely down. And out of all the major indices, this actually popped up and it gave us that kind of higher levels to short. We didn't really get as much of that in like SPY. I mean, we got a little bit of a pop, but not as much from than FXI. Damn, Mitch bought puts right here. Should have followed him.
Nice.
Yeah, lucky Mitch. He should have been greedy. Should have been more aggressive with U.S. indices puts. Good for you, Mitch. Good for you. Congrats on that play. At least you had the mental fortitude to do it. Okay, so that's that. That's all I had planned. We will, again, keep an eye on that auction. Let's see here. That auction. This auction right here. The 30-year bond auction. Again, if we see yields higher, it keeps going higher. I can see that sending the markets down later today. That's going to be our lie detector. Okay, what this comes out. Okay, it comes out in about 7 minutes. So we shall see what happens. Okay, I think if it keeps going up, we could see a little bit of an end of day sell off. Now, if it comes down as low, if it starts getting low, like maybe under 3, then maybe we see a little bit of a relief rally continuing, especially in growth. Okay, so back to this. Where did it go? Oh, here. So again, if this goes up All right. I think end of day, we're probably just going to see a sell-off. Okay. If this is down, expect this line to keep going up and expect tech outperformance to continue. Okay. Oh, and just in case, this is our AD line. Oh man, our junk bonds AD line. Okay. We did have a decline yesterday. And so remember how I said it's not even worth mentioning. We have a little divergence here. And I also said yesterday that even though we had 4 advances in a row, it was very weak advances. Okay. So we will see what today's reading is. If it's really down, if today's reading just goes really down, especially after that auction, and the market stays around this level, I mean, I think we can see some more volatility ahead. I think that would be a sign that more volatility is coming up. Okay. We shall see. We'll keep monitoring this. Okay. We'll keep monitoring this. Any other questions, comments, rude remarks? Going once, going twice. Sold. Okay. All right. That is it. We'll stop streaming today on YouTube and Twitch. And again, I always keep the Twitch platform up so that you can see what I am looking at, the data and the charts that I look at throughout the day. If you guys are listening in from YouTube or Twitch, join our Discord. We have conversations like this on a daily basis. We'd love to have you in the conversation as well. Tomorrow is Thursday. We will have high noon highlights, as always, noon Eastern time, and we'll go over the auction as well as any reaction to that auction tomorrow. Okay. Hopefully, I can get some time to come back later in the day, and maybe we'll have an end of day session today as well, guys.